This is the little matching exercise for fiscal policy, and again we'll just go through looking at these long explanations and seeing which one they match up with. I made a little mistake at the bottom there, so I've corrected it. First one, a tax on goods and services. Remember that fiscal policy is all about, it says taxation here, it's about government spending, one thing, and it's also about taxation. When you're looking at fiscal policy, you're looking at those two things being done to affect aggregate demand in the economy, hence being a demand side policy. So a tax on goods and services. This is an indirect tax because you're paying for the tax sort of along a chain. When you go to a shop, if something, for example, has VAT on it, value added tax, you buy the product and the VAT is included in the price, and then the business has to pass it on to HMRC, Her Majesty's Revenue and Customs. So you go to the shop and then you give the money to the shop, but then the shop has to give the money to HMRC. So that's why it's indirect, because it's not going straight from you to HMRC, or the money isn't going straight from the shop to HMRC because you've given the money to the shop. The next one, where government spending exceeds tax revenue in any year. This is really important. If you look at 1 year, if the amount that the government is spending is greater than the amount of tax revenue, then we say that you have a budget deficit or a fiscal deficit. It means exactly the same thing. So that's number 3. The next one, the cumulative. So this isn't just in 1 year, this is over time. So this is different from the one before, the cumulative amount of money owed by the government. So this is where they've had a budget deficit, like the last one, in a year. Then maybe they've had another budget deficit or a small surplus, and on, but they owe money altogether. And that's called our national debt. And if you look online, you can see that that's going up and up and up all the time because we have to pay interest on the money that we owe as a government. Next one, D, a tax on income or profit paid directly to the government. This is a direct tax. This is number 1, and this is obviously different to an indirect tax. So an example of this would be income tax or corporation tax. This is because these taxes are paid directly to the government, to Her Majesty's Revenue and Customs. If we have a person paying income tax, they pay it directly to HMRC. If you have a shop or another type of business, they pay their corporation tax on their profits directly to HMRC. The last one, where government spending is less than tax revenue in any year. So government spending is less than tax revenue. They're not spending all the money that they're getting in. This is a budget surplus, or you could call it a fiscal surplus. It's the same thing, number 4.